Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeacArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeacArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the ForexPeacArmy.com. We'll continue to discuss situation on the euro currency, start from the daily time frame as usual. Well, just to remind you a bit our expectation on the daily time frame, we said that since this is the first pullback on the daily time frame as on the weekly time frame after the solid previous bearish trend, usually the first pullback by the momentum of the market shows the deep retracement, at least to the 618 support from the whole swing to the upside. The major problem though that market still has at least 1 week to start this retracement, since our expectation is based on the Jod Napoli directional signal on the weekly bread and butter trade, also known as the momentum trade. Well, and based on another Jod Napoli signal, directional signal on the daily time frame that calls double repo sell. Well, I have talked about these signals a million of times in our video research. The major point that we need to trigger this potential pattern to the downside is the close below this green line. Green line is the simple 3-period moving simple moving average shifted forward for the 3 periods. We need this indicator for interpreting the thrust and catching the thrust on the market. Well, many of us on the forum asked, since this close was slightly higher, the 3x3, could we still treat it as the triggered pattern? So could we start trade it? Well, in general, I am not stand on the side of the forcing the patterns as we wish, because this is the close price and it relation to this indicator is very precise. So we either have the close or we do not have it. Let's take a look at the numbers. We see that MA moving average stands at 131.23.33. Yesterday's close was at 133.31.25. So we see that close was 2 pips higher than the moving average. So I think that this is not the signal. So we need to clear close below this pattern to trigger it, to force it or to not. This is a choice about is up to you. But personally, I think that this is not the situation where we should to do that. Sometimes it happens that yes, probably market act as the double repo pattern and doesn't show the necessary close above, then close below, and again close above. Well, but in current environment, I think that we should wait a bit more, since this price action is very interesting. Take a look, that market is showing really long shadows in the both directions with the relatively small bodies of the candles. Tells that the range of trading is relatively wide, but price stands approximately in the same area. This could be treated as the market indecision. Probably and partially this situation could be driven by the indecision in the Greece environment, since although Greece has come to agreement with the private creditors about the withdrawal of the approximately 70% of debt, private debt, now it has to make the most difficult step and the contracting of the budget deficit by the cutting of the wages in the government sector. This is really the Pandora box and could lead to the revolution, maybe even in Greece. So this is very difficult step to do. But if Greece will not do that, they will not receive the help from the IMF. Well, and it probably could come to the default. That's why it's very difficult. Maybe this will be the part of this price action that could at least partially describe this price action. Well, from the technical perspective, we know that that was the daily confluence resistance area. Was the combination of the two different fib levels on 38 and 618 from the different reaction points. And we have seen this retracement to the downside that has started by this nice two candlestick pattern to the downside. But let's take a look at the overall price action. I suppose that this is a bit too extended for the respect of the just confluence resistance area on the daily time frame. This is a bit more than just a respect of that area. And as longer market stands in that range to the side move, as more energy is building inside the market, and it's more probable that the breakout will be really strong. And currently it looks like that it probably should be to the downside, since if this was breakout to the upside, take a look, this is really nice for us to the upside. This retracement is quite shallow, so as market intends to continue move, this was some kind of flag price action that we have discussed, it probably should have done it already to the upside. But market still stands. If market doesn't want to go to the upside, then probably it will go to the downside, and this move probably could be really strong. That's why I prefer do not trade inside this really choppy price action, and it's really very volatile trading sessions inside of the trading this, but wait to the clear pattern, wait for the clear signal. If market will trigger this pattern and will show the close below this green line, probably it could even happen today, then it will give me the signal, the bearish signal on the daily time frame that will be absolutely in agreement with the weekly pattern that has the minimum target is 128.60. So how you will act, it will be this choice is up to you. You could try to anticipate this, but take a look at the shadows. Well, currently we can't exclude that market still could show some new high. This is really probable, since the butterfly on the 4-hour time frame that we have discussed hasn't been cancelled yet by the markets, and that low is higher than that low, and this initial swing of this butterfly is still valid. So that's why I prefer to wait the clear pattern. From another point of view, besides that we just have discussed this long-term consolidation, this really long tails, take a look that market stands below the weekly pivot point. This is tells that market probably still has slightly bearish sentiment, since it holds below the weekly pivot point. So currently, taking into consideration the price, the pattern on the weekly time frame, and this potential Jordan-Napoli double ripple sale pattern, it's probably I personally I will expect the downward move, but I do not want to anticipate it. I will wait for the clearer pattern before pull the trigger. Let's take a look on the 4-hour time frame. On the 4-hour time frame, what do we have? This pattern that you guys discussed on the forum yesterday, A, B, C top. Take a look that 100% extension stands below this low, and market hasn't quite reached it. So even if you will take it as a point, starting of that bar is right here. Even in this case, this target will stand below this low, and you can see that market hasn't quite reached it. Well, very often when some target stands slightly below the point where market has shown reversal, it very often returns back and hitting it. That is happening in the most cases. Well, sometimes market doesn't do that, but this is odds suggest that it probably happens than not happen. Well, also what we have else. First of all, take a look at the weekly pivot point that we have already discussed. Market stands below it, and take a look at this price action. You can see that market stands above this red line. The red line is the Jordan-Napoli MACD predictor indicator. Well, when the price stands above this red line, the trend by MACD is bullish. But take a look at the price action. Trend is bullish, but price action is not. Price continue move to the downside, and I will not be surprised if market will just erase this thrusting bar to the upside by hitting this 100% extension target. That is very often happens, especially on the intraday charts. I can't stand that it will happen 100% probability, but that is very probable, especially we'll take a look at the price action on the daily time frame. Anyway, I will be watching for the confirmation of the sell signals on the daily time frame. At the same time, on the hourly chart, what else we see? We see that hourly trend turns bearish. It's right here. And take a look at that price action. Here we have the unfilled gap on the yesterday's trading session, and I suppose that that price action could be triggered by the filling of that gap. Take a look, market just hit it, okay, fill that gap and turn to the downside by holding below the weekly pivot point. Also, that was the 618 resistance of that swing from that high to that low. Take a look at this price action. A, by the non-farm payrolls candle. B, C top, market hit 618, accelerate further. This is almost the 100% extension target. I just do not have it on this chart. Very often when the market hits ABCD pattern, it shows the 618 retracement to the upside. That has happened. And after that, it proceeds to the 1618 extension that stands around 129.30 area. So that could be the move in accordance with the weekly pattern to the 128.60 target. So you could understand now that the trading without the clear pattern is a bit unsafe. So we have that pattern to the downside, but also we have this ABCD on the 4-hour time frame, so it could lead to the upside if market will proceed higher. This butterfly that we have discussed, this left wing, that is the right wing. So 127 extension stands at 132.94 is right here. So this move to the upside, at least theoretically, still could happen, since market hasn't taken out this low. As it hasn't done this, then probably could proceed high. So consider the environment and trading inside of this just sloppy consolidation and very unsafe. That's why the clue to decision and to choose the direction is I suppose the daily pattern. So if you can't sit on your hands, then probably you could try to trade something. Maybe this pattern A, B, C bottom if market looks very high. So it's a bit unsafe and a bit dangerous. Or maybe you will trade this bearish pattern A, B, C with the moving to the downside. This choice is up to you. But probably it's better to wait for the confirmation on the daily time frame. When it will come, then probably it will give us the much more confidence to take the direction, and suppose that the target of the 128.60, if market still continue move to the downside, will be quite sufficient to make sufficient profit on the move to the downside. If even you will not be ready to enter in time just after the confirmation, this is enough room to enter on the nearest retracement on the 4-hour time frame according to this move to the downside. So that is our view on the current environment. Choose by yourself what patterns you would like to trade. Maybe this will be the bearish ABCD on the hourly time frame. Maybe this will be the continuation to the upside and potential butterfly, or you will be waiting for the clear pattern on the daily time frame. That is choice is up to you. But control your risk. Pull the trigger only when you have the sufficient confidence to do that, and follow your trading plan.